Welcome aboard for another Agriculture Today here on the K-State Radio Network. Thanks for tuning in, as always, for the grain market overview to start off this Friday edition. Courtesy of Research and Extension, grain market economist for K-State, based in Northwest Kansas, Dan O'Brien. Dan, before we wade into the grain market fundamentals of the week, this socio-political turbulence, and that's grossly understating it, that we've seen evolve the last several days. This could well at some point have a ripple effect on our commodity markets, could it not?
Yes, and of course you have to be careful about being partisan on either side and talk about these things. But I think what no one would argue about is that there's more worries in international markets that countries by their behavior, we're less certain how they'll respond either passively or aggressively in all of these things and in all of these current situations. I note that the long-term trend still in the U.S. stock market is very positive, although yesterday a bit of a turn to the negative. The U.S. dollar is negative relative to Canadian dollar, Australian dollar, all for the day, British pound, Brazilian real, Swiss franc, euro. So a person doesn't want to over respond, but for those that are selling grain, I think the international markets that we're selling into are less sure now than they were because of all this upheaval and all the problems that are happening over there. And you of course have the direct effect in that part of the world on trade. If anything, we probably will out of humanitarian purposes, we'll probably supply people grain. I wouldn't be surprised that we would, but it's the actions of other major world powers in response to all that's going on over there, and that adds some uncertainty to this. And I think at the end, and I hope I'm accurately saying this, if we have events that really heighten uncertainty in world markets, that people participating in those tend to want to get out of their positions and go protect cash. And if they're, and we've had a pretty strong long position here in a lot of our grains, with Dees corn closing yesterday at a little over 550, November soybeans 1326, December hard red winter wheat at 728. These are lofty levels. If we have a lot of uncertainty in the market, then as people again move to cash, they tend to get out of any long positions that they have to protect themselves, and that could have an effect on the market. So not absolutely predicting that, but how else do markets respond? That fluid markets with investors all in play. How do those markets respond? So that's something to watch for. I think there's another thing, Eric. You and I talked before we came on the air of something else. So I just talked about how uncertainty could shake markets up, and you think at least temporarily could have a negative effect. I wonder about the psychology of buyers. We've come through a year where we've had serious drought in the northern part of the U.S. And western part of the U.S. on into Canada. La Nina is projected. It's impacting South America right now, particularly Argentina. And look, in the materials we put together, you look at the drought map of South America, major areas have been affected by all this. And we're coming into their planting season. Mm-hmm. So I wonder whether buyers will sit by passively and with their normal amount of confidence that supplies will just be there if they're not taken now. Our normal waiting through, waiting for low prices to come at harvest, if that'll be our mode, or in the current environment that's a little more shaken, and given what they've just experienced, and in particular, commodity prices from last fall harvest being the lowest we've seen for a while, and then the rallies coming afterwards. If they've just experienced that, will they end up and be passive in their buying? We may not see it. This could be one of those situations where you'd see the futures say, big crop, whatever. But if that's the case, then where you could see the actions in the basis in terms of very, very strong basis. I would say, in looking at basis trends in Kansas here recently, the strongest commodity, when you're comparing corn and grain sorghum and hard red winter wheat and soybeans in terms of the different quadrants of the state, major locations, soybean basis pretty strong right now. And of course, Brazil, South America, running towards the end of their available supplies. Their turn to be frontal with quantity is the end is in sight. We've seen buying come into those markets more, and with that, here of late for soybean basis levels, we've seen some pretty strong. Well, we've seen it's tortured up and down, but we've seen a general uptrend in basis levels for soybeans, and you really see it at Hutchinson. You see it strongly at Columbus, up and down a lot. At location we're watching in Topeka, Salina pretty strong. It's strong, continues to be strong in Western Kansas, and all these basis levels that we see now are tangibly stronger than anything we've seen since 2017, and not just by a few cents. We're talking 10, 15, 20 cents. So the soybean market, with exports coming on, is responding pretty strongly, and you see strength in most parts of the state. We've seen some decline in the last 2 or 3 weeks, in some weakening of corn basis, but we're still in all but southeast Kansas, we're still the strongest basis level that we've seen tangibly, but not by just 1 or 2 cents, but by for instance, say in Topeka, by about 20 cents than we've seen anything since 2017. So I guess I know I'm running on this, but the point being that I think a lot of what happens in the fall will of course, it'll have to do with how crop development works out, what the moisture did, and where the crops end up at. But what will be the psychology of the markets when things are kind of shaken up? They came through a year, they weren't sure they were going to have enough supplies, and now we'll have supplies. Will they sit back and just wait for a better price somewhere down the road? I think the general skittishness and worries of what we talked about earlier may very well support strength, at least in the cash markets, more so than just a passive attitude, in my thinking.
Because of all of this extraneous stuff going on, Dan, one wonders if the impacts of the weather on our row crop markets will start to wane. Will those take a back seat, if you will, to all of this other material influence going on?
It might. Well, I think the biggest impacts of those of weather events will be seen on the days of USDA reports. We have the September WASDE report coming up, I think, on the 10th. And so that's the next one. Then we'll have our October, I believe that's the 12th. I have to double check that. So on the days the USDA releases those crop production numbers, there's likely to be a lot of volatility. And I'd contend if we come into one of those reports and they're 250 million bushels higher or 250 million bushels lower, then we just adjust up, or we adjust down, or conversely to the direction. But all this other volatility on the demand side will come into play. One thing to watch, again, you and I've talked about this, is now as we speak, we're just on the precipice of coming into the delivery period for the September contracts for corn, for soybeans, for hard red winter wheat. And interesting thing, situation yesterday, some analysts mentioned, makes sense that most of the soybean market was down actually on yesterday, down 6, 7, 8, 9 cents, except for the September contract, which is up 21 cents. And why would that be the case? Well, people that have positions, traders that have positions there, if they want to have somebody be forced to give them tangible physical soybeans, they want delivery to them. So you saw that yesterday, and that's something to really watch. It really aims us towards that September 30th stocks report and the indication that'll give on how much use we had this last quarter. And I'd go a step further. So on corn, you saw September corn up about 1.5 cents, D's corn down 1. Not really a lot of differential there, but I think over the next week I would watch both of those. September corn and soybean futures to see as they go off the board. Just are people scrambling for supplies or not? And really the behavior of that at that time will have a lot. I think that might have a lot to do with how the market responds, and as we keep moving through the rest of September and October. Again, just how tight are we? And the tighter we are for supplies getting to that new crop, probably the more anxious people will be to buy in the cash market and have at least some strong basis levels. You might note that I'm being a little hesitant to say what the futures will do. You have a whole broad number of players there, et cetera. But when you get down to the business level, the commercial level, where they have to have these products to keep going, that's where the basis could be affected, even if the futures do whatever as they're responding to broader issues.
With all this stirring, then really for producers, they need to be poised to respond to whatever happens here. That's pretty important at this juncture, isn't it?
Well, they're going to be harvesting, and so it'll be, and their attention will be elsewhere. We also have people deciding what to do for seeding wheat. And it's been pretty hot Western Kansas here of late. And again, Mary Knapp probably will discuss all that. But we have both new crop sales for corn, sorghum, and soybeans coming on. Harvest for sunflower. I'm going to mention that in a second if we have time. At the same time that we're deciding what to do for wheat acres and for seeding for next year. And September right now, yesterday closed at 715.5, tremendous price historically, and really carry in the market on all the way out to May. So pretty strong prices. What will people do as they go forward? One thing's going to be apparent that we're probably, unless we're really surprised, probably going to have a pretty good crop insurance price for hard red winter wheat, for revenue insurance tools. And if it's above $7 somewhere in there, that's an issue. Again, all the problems they've had for wheat up into the Dakotas, Montana, and on into Canada with first, most of the year, not enough moisture. Now, when they're trying to harvest whatever they can, they're getting flooded, just a calamity upon calamity up in those areas. And really a thing. I would mention, when you look at the United States, North America, and look at how much of our sunflower production is in drought, 90%.
Right.
And sunflower is a big, an important crop in a lot of parts of Kansas, but in the broader oilseed complex, with the tightness in soybeans that's going on and the expansion of renewable diesel going on, that it's to have canola, sunflowers in those northern areas be short just lend support to the oilseed complex overall, and positive news for pricing prospects for soybeans.
No lack for dynamics in the markets, that is for certain. Dan puts together weekly notes on the trades, what's going on, and how you producers might read those actions. That's at agmanager.info, agmanager.info. As always, Dan, thank you. Next week, we'll talk again.
Thanks, Eric. Take care.
Dan O'Brien, grain market economist, K-State Research and Extension with us on this part of Agriculture Today.